Welcome back for another Quant price prediction update, and in this video I'll be diving deep into the technical analysis here on the Quant chart. And before I do so, show some love by first giving this video a thumbs up, subscribe to the channel, and also check out the channel membership. And in this video I want to first focus on a chart pattern that I gave you in my previous video, which is a chart pattern that breaks to the upper side, where I showed you this inverse head and shoulders pattern that was in formation, having our neckline at around the $119.1 mark and our head giving us a low at around the $114.4 mark. And this is a chart pattern that is supposed to break to the upper side, where I have my minimum target areas at around the $124.9 mark. And in case we see a break above the neckline, then there are high chances that Quant is going to give us that high at around the $124.9 mark. Though at the time of this recording we seem not to be having that buying pressure for us to continue gearing up. And as a result of that, I have two scenarios that I want to discuss with you, basing it on the Elliot structures. And to better see that, I'll be zooming out on the charts so that you can see that after seeing our low at around the $97.5 mark, we started a massive bounce to the upside, obeying the Elliot structures, where I'm terming this as the first wave. Then we saw a corrective structure in that wave 2, then a wave 3, then a wave 4, and then the wave 5 has now given us a high at around the $119.8 mark. And this is on the first scenario that I'm expecting here on the Quant chart. And there are high chances that we have now topped in the formation of this wave 5 and also completed the formation of this larger Elliott wave count 1. And this scenario also suggests that we are not going to see the breakout out of this inverse head and shoulders pattern that we have over here, and we are going to continue seeing further breakdown in what will be the start of a corrective structure in the formation of these larger Elliott wave count 2. And if that is the case and we continue seeing further breakdown in that wave 2, then using the Fibonacci's, connecting them from the low of the first wave to the high of that wave 1, that should give me a minimum retracement area for that wave 2 between the Fib level 0.5 and the Fib level 0.618, which lies between the $108.3 mark and the $105.5 mark. And it is within this red target area that I have on the charts that we could see that breakdown in the formation of that wave 2 bottom in. And in the formation of that wave 2, I will also be expecting to see a corrective structure also play out, where I'll be expecting to see an ABC corrective structure like that, having the wave C fully maximizing our red target area and also giving us the low for that second wave. And once that happens, then that will be another perfect entry to get back into Quant, so that we can be able to ride a massive pump to the upside in the formation of that wave 3. So that is what we can expect on the first case scenario, basing it on the Elliott wave structures. The other possible Elliott wave structure that we can have on the charts is based on this inverse head and shoulders pattern that I have right here. In case we see the breakout out of this chart pattern and get one more high at around the $123.9 mark, then that will be suggesting that the high that we have at around the $119.8 mark is not the high for this wave 5, and we could get one more high in case we see the breakout to the upper side. And once that happens, then that will be completing the formation of that wave 1. Then we can expect a corrective structure in the formation of that wave 2, and basing it on the Elliott wave structures, that is on the Fibonacci's, we can be able to get new target areas for that pullback to the lower side in the formation of that wave 2. So those are the two possible scenarios that I have here on the Quant chart, and we need to continue watching for a break above the neckline at around the $119.8 mark. And in case we see a break below the head at around the $114.4 mark, then that will be confirming that the high for this first wave is in, and we are now seeing a corrective structure in the formation of this wave 2. Target areas at around the $108.8 mark, and the $105.6 mark as a minimum retracement area, and that is what I'm expecting here on the Quant chart. Also taking a look at the indicators, on the RSI we are trading at around the 52 mark. Also taking a look at the MACD, here on the MACD we have been able to print a bearish cross, suggesting further breakdown, and also the high chances that the high for this first wave is in, and we are now seeing a bit of a breakdown in the formation of this wave 2. So let's be patient and see how that plays out, and I'll be keeping you updated.